question the Fed is now managing is not, do we have an overheating problem? The new problem is, how do you land this economy softly?
We really can't control the stock price. What we can control is our execution.
Day after day, new records are being set in terms of the number of infections. The situation is serious.
This is Bloomberg Surveillance, early edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. The EU is to endorse a 9-month limit on COVID vaccine validity for travel. The move is seen as strengthening the case for boosters. The incoming Chancellor, Olaf Schultz, sets out to steer Germany through the resurgent pandemic. COVID-related deaths in Europe's largest economy hit 100,000. And Taper Talk, the latest Fed minutes actually show officials are open to removing policy support at a faster pace to rein in inflation. Now, first thing is first, let's check in on the markets. Remember, it's Thanksgiving. Happy Thanksgiving to our American friends. It means that we're seeing volumes thinner than usual. Still, we're seeing a bit of support when it comes to the European stock 600, also the S&P futures. This is on the back of signs that there's a solid recovery in the U.S., that we do have more elevated inflation maybe than expected. That will spur Fed policy adjustment, but at the same time, it's not actually hitting any of the consumer stocks. We also had some pretty encouraging news out of China on how they're trying to stabilize the economy. One thing we need to look at is the U.S. dollar. Really strengthening in the last couple of days. Currently, you can see we picked the Bloomberg U.S. dollar index at 118.8, and then euro dollar 112.26. Remember, at 12:30 UK time, we also have the ECB minutes. If you look at the breakdown, country on country, now we're seeing a couple of stocks that we're watching out for. One of them is Orange, after Stéphane Richard, the chief executive, 11 years in charge, had to step down. The CAC 40, you can see, gaining some 0.2%, similar gains across the DAX, the FTSE, and here in the UK. And then we know also that the European Union is putting this proposal about what to do with people traveling. They need a booster after 9 months. Now, Europe, once again, the epicenter of the pandemic. Germany has passed 100,000 coronavirus deaths, with new infections still rising and hospitals in some cities becoming overwhelmed. Countries have been adding new measures to face its fourth wave on the continent. Germany is considering vaccine mandates, and we've learned that the EU is set to recommend a 9-month limit on COVID vaccine validity for travel. Let's get more now with our Bloomberg Intelligence senior pharmaceutical analyst, Sam Fazeli. Sam, the situation seems pretty bad in Europe. Do we know why it's gotten worse and almost exponentially?
Well, hi, Francine, and thanks for having me on this morning. Obviously, we are coming into the winter, and that is the time of respiratory infections. That was a lot of things that people had. That's exactly what people had expected to a degree. And then what I'm trying to figure out is why there's such a disparity between the different countries. Belgium having one of the highest case rises, Holland, and then of course you've got Austria, which is off the scale in terms of per capita case counts. And that, a lot of that, I think, goes back to the measures that the countries have been taking along the way in terms of masking and current rules. And those are things that really, really make a difference to the risk of infection. Keeping people apart is important.
Yeah, so Sam, first of all, how much stricter will measures need to get to fight this wave of the virus? And it seems that the UK was actually much more lax in terms of not having a COVID vaccine passport, no mask wearing, actually. But do the cases match, the laxity of the rules?
Well, to a degree they do, Francine. When you look at the across the continent, when you have countries such as France, I mean, it's a very complex interplay between a whole lot of different variables. But the key variable is if you've managed to keep people distant from each other or having at least wearing masks so that they're not breathing on each other, that certainly does seem to help. And when you look at case counts in France, although they're going up too, and compare them to, for instance, Portugal, where everybody, I think, observes the mask wearing, etc., and then go to other countries, case counts, I think, do fit with the laxity of rules.
Sam, we're just getting some breaking news that, the French health authority recommending COVID booster for all adults. This is on the back of the EU recommending, of course, this 9-month limit for the vaccine validity. Do we have enough vaccines for this to go around? Or again, does it take actually, important vaccines away from emerging countries?
Yeah, I mean, that unfortunate problem will continue to be an issue. But even if you give a booster shot to the entirety of the European Union, you're talking 400 million doses. This is one shot here. And in 2022, which is where a lot of this, I think, will be happening, we're expecting something like 8 billion doses from just the mRNA vaccine makers. And then you've got 4 billion from Serum Institute for the AstraZeneca vaccine and 2 billion from Astra directly. So we will be awash in doses. The point is trying to get them to the countries that need them most is critical. And that's where I think the challenge of 2022 will be. Not supply, but more actually getting them and distributing them and getting to people's arms.
Sam, very quickly, I mean, I guess the other concern is that if you have one second dose, then it's very likely that you get a booster shot if it's offered. How do you entice people that just don't want to be vaccinated?
That's a problem that we've had all the way along here. I mean, if they're not, and I know somebody like that, if they're not interested in the vaccine at all, they're prepared to give up the going to a restaurant or a theater or a bar, etc. Unfortunately, all those decisions do eventually impact others because those people are at risk. And when infection levels are high and vaccinated people can be infected and transmit, then they're at risk. They fill up the hospitals and impacts the rest of the healthcare system. And that's really not fair.
Thank you so much. Sam Fazeli there, Bloomberg Intelligence Senior Pharmaceutical Analyst. Now, joining us is HSBC Global Chief Economist Janet Henry to talk about, of course, the economy and to talk about some of the resurgent cases. Janet, thank you for joining us. If you look at monetary policy, but also just the growth trajectory of a lot of these European countries, are we going to see lower growth because of further lockdowns or restrictions? Or, that could change the trajectory, or will it just be blips?
Well, it's certainly going to be uneven, and it's going to still be a little bit volatile. And it's going to vary a lot within countries. I mean, it's interesting just looking at the big four. Actually, if you look at France, Italy and Spain, the momentum is still quite strong. But Germany is obviously one of the countries that could potentially be on the verge of more restrictions coming through. And Germany, the data have been disappointing. Unusually for Germany, not on the consumer side, but because of the supply disruptions on the industrial side. So without a doubt, it is not good for growth. Anything that interrupts the reopening and that restricts activity is, at least in the near term, going to be damaging for growth prospects.
Yeah, could we see, Janet, that pushing inflation higher actually because of supply chain constraints, while at the same time hurting growth? So does that accentuate the stagflation concerns?
Well, yes, they're certainly going to be moving in opposite directions, but it is impossible to forecast the precise timing, because we're also seeing this play out in China. You may recall that we had the October China data, retail sales picked up, but actually the resurgence in cases in China, but from a tiny level compared to what's happening in Europe, actually meant more restrictions at the end of the month. Now in November, we'll probably see some softening of the consumer spending side. And I think it will be the same. We'll see that in Europe as these restrictions get eased and then lifted at the same time as prices are not coming down. These supply disruptions, yes, at the margins, chip shortages for the auto sector are easing. We finally saw US production of cars pick up in the last month, but in Germany, it is extraordinary. The divergence between orders and production, it's quite clear that those disruptions are still in place at a time when inflation is rising with slowing activity.
Janet, what are you expecting from the new government actually in Germany, and what's the potential there for who takes over the ECB and what that means actually, who takes over the Bundesbank and what that means for ECB?
Well, yeah, I think, when we think about the ECB, we are used to, since the inception of the ECB, of the head of the Bundesbank speaking with that very kind of traditional Bundesbank mindset. So it would be unusual if the head of the Bundesbank was not more concerned about the possible upside risks to inflation than the broader board. But remember, typically we have two German people on the ECB, and currently that is the case because we also have Schneibel on the executive board, and that matters too. So I wouldn't say that the head of the Bundesbank matters in particular. It's not going to completely change the direction of the ECB. That's still very much led by Lagarde and by the board of the ECB, and that will set the direction for policy. But we would need to get used to, absolutely, the Bundesbank voice still being heard.
Janet, thank you so much. Janet Henry there from HSBC stays with us, and we'll talk a lot more about the Fed, because the latest Fed minutes show officials were open to removing policy support at a faster pace to rein in inflation. Up next, we continue our conversation with HSBC's Janet Henry. You can send in your questions on IB Plus TV Go. This is Bloomberg.
Rhetoric you saw from Chairman Powell and Vice Chair Brainerd portends a new era here for the Fed. I think the question the Fed is now managing is not, do we have an overheating problem? Can we bet with Team Transitory? They know we do have an overheating problem and that they can't place their bet with Team Transitory. They've got a new problem, and it's a very complicated one, and I very much hope they'll be very thoughtful about it, because there are no easy answers. The new problem is, how do you land this economy softly?
That was the former U.S. Treasury Secretary Larry Summers saying that the Fed is coming to terms with an overheating economy, and that's after the latest FOMC minutes showed officials open to removing policy support at a faster pace to keep inflation in check, even before data showed price pressures accelerating. Well, we're back with Janet Henry, Global Chief Economist at HSBC. Janet, when you look at what we heard from the Fed minutes yesterday and how inflation is taking hold, when are you expecting the Fed to move?
Well, I think the first attention is what happens regarding the tapering. Obviously, at the November meeting, they set out an initial path for tapering, certainly for November and December, that will put them on track to halt the asset purchases in the middle of the year, in fact. And in fact, that's why the market's fully priced for a rate rise in June, so that asset purchases would end just before that rate rise would actually happen. But obviously, it's not just the minutes, it's the comments that we've had from all of the other Fed presidents. And we're used to some divergence from the kind of regional Fed presidents. Usually the board speaks with one voice, but we've had doves like Daly saying she's open to it, and even speeches from Clarida. So I think what we heard from the minutes was a confirmation of that actually a number of participants are open to accelerating the asset purchases if the data continue to firm. And it's not just about employment, it's not just about inflation, it is about employment too. You know, the data are quite firm, and inflation has been rising and broadening.
So, Janet, talk to me a little bit about sequencing, because that will probably be the toughest job of the Fed right now, to make sure that the markets understand it. How do you see this exactly playing out?
Well, I think, there is obviously a growing likelihood that the Fed does accelerate the purchases, but with no pre-commitment. I mean, I'm sure the market would react, because they think it's unlikely the Fed will continue asset purchases at the same time as raising rates. So if they were to accelerate the purchases, and that could well happen at the December meeting, particularly if we get another very firm payrolls, that could halt the asset purchases by the end of by the middle of March, and that would give them the option, potentially, of raising rates even as soon as the second quarter. But I don't think they will commit at that point, because as Larry Summers said in your opening sequence, it's a very complicated situation. And even Jay Powell in his speech has been, yes, their most likely scenario is that inflation comes down, but they have no confidence on the timing or the likelihood. So it's the end of tapering, then they wait to see if there's further progress, or indeed whether inflation has to dominate their desire to make even further progress regarding their employment goal before raising rates.
Janet, talk to me. Yeah, Janet, so talk to me a little bit about, dollar. Do you have dollar strengthening from here, and what needs to happen for it to, go back down a bit?
We do. It's not an aggressive view on the dollar. Our currency strategists have a forecast on euro dollar of 110, but that's by the end of 2022 on the assumption that a degree of Fed rate rises are already priced in. But we do think that the Fed will be raising rates, and we don't think the ECB will. And obviously on the ECB, the markets still have a likelihood that the ECB starts tightening by the end of 2022, and we don't share that view. We still think they'll be making asset purchases at that point. What could cause it to change course? I think probably a policy of benign neglect, which I don't think the Fed has. If the markets took the view that actually that the Fed was way behind the curve and it was going to sit back and do nothing at any point, even as inflation continues to rise, then it could be potentially that the currency decides to weaken. But we think that's unlikely. We've still got a firming dollar, even if it's not an aggressive move.
Thank you so much, Janet Henry, the Global Chief Economist at HSBC, joining us this morning. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The EU is recommending a 9-month time limit for the validity of COVID-19 vaccinations for travel into the 27-nation bloc. It is also calling for member countries to reopen from January the 10th to all those who have used vaccines approved by the WHO. EU governments are pushing for the bloc to smooth out differences in rules to help safeguard the ability to travel. Now, Germany's new government is promising to slash greenhouse gas emissions with a faster coal exit, more renewables and a new carbon price floor. After nearly 2 months of negotiations, the centre-left Social Democrats sealed a coalition agreement with the Greens and pro-business Free Democrats. The deal will see Olaf Schultz replace Angela Merkel as Germany's chancellor. That will happen within weeks. And Sweden's first female Prime Minister, Magdalena Andersson, has been forced to resign just hours after her historic appointment. The resignation was triggered after a junior coalition partner left her government over the loss of next year's budget vote. The former finance minister says she's still ready to lead the one-party cabinet and will now face a new vote. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Up next, American households are about to eat their costliest Thanksgiving meal ever, if they can even find the turkey. We look at some of the factors driving up dinner prices. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, it's Thanksgiving, but the impact of rising inflation on America's turkey dinner might just dampen the mood. Now, for more, we're joined by Bloomberg's Ed Ludlow. Ed, good morning to you. Talk us through the rising price of a Thanksgiving meal. Yeah,
the inflation discussion is just at the heart of financial markets right now. And while it might be slightly light-hearted and tongue-in-cheek, at Thanksgiving, the cost is 14% higher for the whole meal, right, year on year. And really at the heart of that is this, the turkey. And it's a great case study because it's an industry that has faced labor shortages for processing. You see retailers, the biggest retailers in the US, dipping into frozen inventories, which are now at lows, driving up prices. And even though consumer demand is robust, this idea of food inflation, food price inflation, is worrying to central banks around the world, right? This is something that is a greater contributor to CPI than other things, including energy at some point. So it is a concern.
Ed, if you bring it closer to home, how would the supply chain actually impact Europe as well? Yeah,
Bloomberg Economics has fantastic data sets tracking supply chain constraints. And in the US, those are easing. What's worrying is that in Europe, we're kind of still on a bad trajectory. This is the Euro area supply constraint indicator that Bloomberg Economics puts together. A positive number indicates a deficit when it comes to supply. What does that mean for inflation, the outlook for inflation? I think we have a terminal chart which basically shows food inflation in the US versus food inflation in Europe. You know, when we got those Fed minutes, which came before the October CPI CPI print, we know that the Fed were already concerned about the trajectory of inflation, particularly in the area of food. Now, food inflation in Europe, the blue bars, isn't kind of at the same level as the US, but we know that their supply chain constraints are going in the wrong direction. So you'd look to that number and wonder if it might start to etch higher as well.
Ed, thank you so much. Ed Ludlow there with some great charts and, of course, looking at some of these pricing pressures and food inflation. Now, coming up, we talk about Turkey. Not that kind, the other kind. The country, the lira's wild swings. We'll get into key drivers in emerging markets with Magdalena Polen from PGIM and Phoenix Callan from Societe Generale. Remember, when we look at some of the trading dynamics today, of course, it's very thin volumes because it is Thanksgiving in the U.S., but globally, stocks are advancing. If you look at what traders are looking at, there seems to be a belief that there's a solid recovery in the U.S., and that outweighs jitters over inflation and a faster tapering of Federal Reserve stimulus. This is Bloomberg. Well, the EU is to endorse a 9-month limit on COVID vaccine validity for travel. The move is seen as strengthening the case for boosters. Incoming Chancellor Olaf Schultz sets out to steer Germany through the resurgent pandemic. COVID-related deaths in Europe's largest economy actually hit 100,000. And JP Morgan in damage control mode. The chief executive, Jamie Dimon, says he regrets his comments about China's Communist Party. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, first thing is first, let's check in on the markets to tell you what's going on. There is a belief in the markets, at least for today, it could change very quickly as it usually does, but that the economy is getting a little bit stronger. Now, stocks are rising on the U.S. growth outlook, and it does seem to be outweighing some of the mood of cautiousness that we've seen over the last couple of weeks. Certainly, we had jitters over inflation and a faster tapering of Federal Reserve stimulus, but the growth trajectory for the moment is taking a hold. Now, while inflation concerns are deepening, traders didn't seem to be in any mood to let go of opportunities to benefit from the U.S. recovery. There was a rising bet not only for a quick taper or quicker taper, but also an earlier liftoff of interest rates. A reminder, it is Thanksgiving, so a lot of U.S. markets are closed. And of course, overall volume is thin. Now let's focus in on the key drivers in emerging markets. And we've seen massive volatility in the lira over the last couple of days. President Erdogan's push for lower interest rates have triggered some wild swings in the Turkish currency. Well, joining us now for more and what this could mean across the EM space is PGIM Fixed Income's principal economist, Magdalena Polen, and Societe Generale's global head of emerging markets research, Phoenix Callan. So thank you both for joining us. Magdalena, let me kick off with you. When you look at some of the dollar dynamics and dollar strength that we could see from here, what does it mean for emerging markets, in general, and also the sequencing of Fed tapering?
Well, it's definitely a challenging time for emerging markets, given the Fed tapering and the growing differentiation between the EMs. As you can see, a country like Turkey with persistent vulnerabilities and lacking of credibility of macro policies is definitely affecting the reaction of that market. And if you look at countries with stronger fundamental, better policies, that is definitely helping with that differentiation. I don't think that has impact on the Fed itself. Yeah. The Fed doesn't really look at the emerging markets as much. It does definitely look at the global economy as such, but the detrimental effects of its tapering doesn't really have impact on its own decisions.
What about you, Phoenix? I mean, is there a worry that stronger dollar could actually, hurt some of the emerging market currencies?
Yes, definitely. A stronger dollar as well as rising U.S. rates. I think those are some of the key challenges for EM, alongside things like the fiscal burdens that are elevated as well, on top of the inflation concerns that we see persisting through the first half of next year. And we've got shrinking real growth differentials between EM and developed markets. And that all leads to diminished capital flows. So we think these forces are likely to exert downward pressure on currencies over the next half year, and upward pressure on EM rates and bond yields.
Yeah, Phoenix, I was speaking actually to a wonderful reporter in Hong Kong, Tanya Chen, who was saying, one of the things that we need to try and figure out is whether stability of yuan, or certainly some of the policies being put in China, could be a counterbalance to what we see from the Fed. So how do you see that playing out?
Yeah, so for us, China is going to act as a key anchor. It's going to contribute to global growth deceleration because the Chinese policymakers have shown that they are much more tolerant of slower growth in exchange for more sustainability, for quality of growth. They've got various reform initiatives, and all of that is embodied in the common prosperity theme. And I think that is going to act toward kind of a targeted regime of targeted fiscal easing measures. They'll be quite sparse and parsimonious with respect to widespread PBOC easing. So we might see limited easing, and that will come over the course of next year. But we think overall that means that China is going to decelerate. They're okay with that, and that's going to anchor medium-term global inflation as well and keep the currency trajectory relatively stable.
Mike Dillon, what's your take? And we'll get to Turkey in a second. But overall, could China actually be a stabilizing force as we see policy adjustment in the Fed?
Absolutely. It's going to be a very important element of the EM stability and growth picture because not only it's such an important driver of EM growth, currencies, prices of commodities, but that shift from the more export-driven growth to a bit more different structural growth, the reallocation of Chinese capital is definitely going to drag down Chinese growth. So the willingness of Chinese policymakers to stabilize growth in the near term to support smaller or medium enterprises like we saw just this week will be very important for that outlook and for a number of regions specifically, so for Asia, for Latin America, South Africa, so countries that still rely quite a lot on either the direct exports or commodity exports will be very important for them as well.
Phoenix, how much lower actually will Chinese growth be? And, again, do they have all the levers but also the political will to stabilize it, even if at a much lower level?
Yeah, so we're projecting for Chinese growth to decelerate sharply to 4.8% growth next year from the current 7.8% this year. They do have a lot of levers. They do have a lot of scope with which to ease, but I think their priorities around kind of managing the deleveraging process, managing systemic risk, being okay with the trade-off between growth and various reform measures, I think that points toward a situation in which we will see them decelerate relatively sharply. The risk of the hard landing has increased because it's now kind of spreading beyond the property sector into kind of the real economy, into consumer confidence. So I think we will see more of those risks, and we'll start to see them stepping up with various targeted easing measures.
Magdalena, what happens in Turkey? Is this yet another boom and bust cycle, or is it something deeper that will lead to further readjustment?
Yes, it's yet another turn of that cycle. As we have seen this happening, and it's this lesson that ourselves and the Turkish policymakers are learning yet again. And with each turn of that cycle, we see that the measures that are needed to stabilize it are more difficult. So this time, it's even more difficult because it's amplified by what we just talked about, so the Fed and the repricing of expectations about global rates. So it is even more challenging than what we saw in 2020 at the time of rather easy money. Yeah. Now we are going really against the Fed and against a slightly weaker Chinese growth picture. It is hard to see how the policymakers will come out of this, given the unwillingness to engage in more orthodox policies. But I think in the end, some measures will have to be taken, either orthodox, so rate tightening, more credible policy, or even potentially the risk of non-orthodox measures, which have been employed in the past. The risk of those, I think, is increasing.
Phoenix, what's your take on the Turkish rates curve inversion?
Yeah, so I think the market has started to sense that emergency rate hikes are certainly on the table and likely for us inevitable because the options are quite limited. We've got depleted FX reserves in Turkey, So either we're looking at some form of capital control or we're looking at a series of emergency rate hikes. And I think given the urgency of the situation, we're likely to see those rate hikes materialize, and that's the likely course of action. But we could see some other soft forms of capital controls as well. So I think in responding to this threat, as we see the currency crisis unfold, I think the market will start to price in sharper rates in the short end, and that's likely to lead to a much further curve inversion.
Phoenix, just a follow-up, actually, and I want to thank all of our viewers who write in. I love hearing from you guys. This person's writing in, Phoenix, saying, look, China, going back to China rarely misses a growth target in times of political shuffling. So this person's asking, isn't this a guarantee for more support next year?
Yes, indeed. We do think that China has to step up. We've been calling for them to step up even this year. And we've seen some of those measures materialize in the form of they're starting to ease back on some of the credit conditions. We've seen lots of liquidity measures in the money markets. So we expect to see more, triple R rate cuts, outright policy rate cuts, and targeted stimulus measures across the economy.
Yeah,
they definitely will have to step up.
But they'll have to step up. Do you agree with that?
Yeah, I think that's, yes, I think there will be definitely some measures to support, given that it's a difficult balancing act to engineer that shift in the economy. And I think we've already seen some signs of that emerging from the authorities.
All right, thank you both for joining us. Phoenix Callan, Global Head of Emerging Market Research at Societe Generale, Magdalena Polen, Principal Economist at PGIM Fixed Income, both joining us, of course, on Turkey and emerging markets. Up next, JP Morgan goes into damage control as the Chief Executive, Jamie Dimon, says he regrets his comments about China's Communist Party. The details next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, JP Morgan's Jamie Dimon says he regrets his joke that his bank is likely to outlast China's Communist Party. In a statement, Dimon said he was trying to emphasize the strength and longevity of the company. It's the latest in a string of provocative remarks that he's been forced to walk back from. Now, let's bring in Bloomberg's Asian government reporter, Ian Marlowe. He, of course, helped to write some great stories looking at the analysis on how, not only JP Morgan, but other chief executives also deal with China and the possible slapback from the country. So, Ian, where are we? I think it was the first time that also publicly China came out and saying they noted the apology.
Yes, exactly. And I think the words from China's foreign ministry here will be kind of closely looked at by a lot of people who deal with China. I mean, this is, especially for Jamie Dimon's comments touching on such a sensitive issue, the survival of the Chinese Communist Party, to have the Ministry of Foreign Affairs basically say, we've noticed the sincere reflection by him. We believe this is the right attitude. We hope the media can stop hyping this issue. I mean, this is pretty remarkable given how strongly China has hit out at a bunch of different institutions in the past on everything from Taiwan to Xinjiang cotton to, Korean companies that got involved in boycotts in China after they were involved in missile defense stuff. It's just it's pretty remarkable to see China actually here kind of walking back and trying to walk down these tensions in the wake of the Xi-Biden meeting the other week.
Yeah, I mean, I'm going to ask you the most difficult question for probably of the decade. I mean, what's the right way of a chief executive that, speaks freely, but that does business in China to deal with China? Because there are certain issues also that you can't, stay away from. So what will the Communist Party in China tolerate?
Yeah, I think that's a crucial question. And I think one of the main things driving comments like Jamie Dimon made the other day is the fact that basically because of China's external aggression on certain issues, whether it's the stuff on Taiwan or the crackdown in Hong Kong or the way they approached, punitive trade tariffs on Australia after their prime minister asked for an investigation into the origins of COVID, the actual public opinion on China in a lot of Western countries has soured to record levels. I mean, the people want to see a little bit of pushback, and that's giving, government, chief executives, the leaders of all sorts of organizations a bit of a new reality to deal with, in the sense where a lot, years ago, no one really wanted, in certain Western societies, especially business lobbies, no one wanted to push China on this stuff, because you'd just get kicked out, you'd get banned, you'd get a regulatory investigation. So it's a bit of a new environment where pressure in the West is actually kind of pushing companies to say things like Jamie Dimon says. So it's a very tricky territory for these people to be navigating.
It certainly is. Ian, thank you so much for all of your insight. Ian Marlowe there from Hong Kong joining us this morning on JP Morgan. Now let's turn to one of our other top interviews. And Kai-Fu Lee is a pioneer in the field of AI. Now in the 80s, he developed a computer program that actually beat the best human player at the strategy game Othello. It was a forerunner of a pivotal moment in artificial intelligence when IBM's Deep Blue beat chess grandmaster Garry Kasparov. Lee has also had a leading career working for U.S. tech companies in China, and he was president of Google China. He now runs a VC firm focused on Chinese tech firms. Now, Lee joined me to discuss the geopolitics of artificial intelligence, as well as the opportunities and the risks that this rapidly developing technology presents.
I think both U.S. and China have tremendous strengths in AI. I think their strengths are actually a bit different. The commercial companies in the commercial areas, I think U.S. tends to be much stronger in enterprise applications like C3 AI and Palantir and companies like that. And China is now showing a lot of progress in robotics, especially for manufacturing and warehouses. And the two countries are both developing great companies in autonomous vehicles, healthcare, and internet. But largely, those companies don't compete against each other due to the current geopolitical tendencies. So I think both countries are, we're seeing tremendous AI companies leveraging the strengths of each country. In the case of US, enterprise software. In the case of China, manufacturing. So I hope AI will end up making companies in both countries winners.
In China, are Chinese companies looking to, have more of an influence domestically rather than internationally, or will that change over time?
I think right now, most of the Chinese AI companies are focused domestically. And should they go abroad, they're more likely to go to countries that have a strong commercial relationship with China and no limitations on technologies. So perhaps the Southeast Asia, Middle East, Africa would be more likely, maybe South America, whereas I think US will tend to have more influence on the traditional areas like English-speaking countries and Europe and Japan. So I think each country will naturally go to the regions where it has some advantage or it has fewer limitations.
Kai-Fu, what does the world look like in 40 years? So, is it going to be like the Terminator, and you get asked that very often at dinner parties, or what's your vision on where we'll end up?
I think it's two very different possible outcomes. As you know, I wrote the book AI 2041. We try to look 20 years out. You want me to look 40 years out. I do think we have two possible outcomes. There's not a lot of scenarios in the middle. I think either we get our act together and figure out how countries can collaborate and finally realize there are many issues we can work together on, like climate and healthcare, and that positive exemplars lead the world and technology problems are overcome. Then we really reach a world of plenitude, where all these technologies will basically eradicate poverty and hunger, and also positive uses will make us live healthier. That's one outcome. The other is that technologies can be misused by people. I don't think technologies will become evil itself and like a Terminator or a dystopia like that, but I do think they provide very powerful weapon to bad people. And terrorists, for example, or countries that choose to use them in a very damaging way to the rest of the world, because I think technology amplifies people's capabilities, and using, take autonomous weapons as an example. It's something that could wipe out lots of people.
Innovation Ventures Chief Executive Kai-Fu Lee there speaking to me earlier on, and you can actually catch and watch that full conversation on Leaders with Laqua, available on Bloomberg.com or here on Bloomberg TV at 9:30 p.m. UK time this evening if you're watching in Europe. Now, up next, Germany passes 100,000 COVID deaths as the latest wave of the pandemic puts hospitals in some hotspots under severe pressure. We'll have the latest as the incoming Chancellor Olaf Schultz says he will review possible immunization mandates. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Germany's latest COVID surge has taken its toll. Deaths past 100,000 since the start of the pandemic, just as Olaf Schultz prepares to succeed Angela Merkel as Chancellor. Now, for more on all of this, let's get straight to Berlin and our German government bureau chief, Birgit Jennen. Thank you so much, Birgit, for joining us. First of all, how does Olaf Schultz, newly appointed, handle the pandemic? We're in a very difficult juncture for infections and people in hospital.
Well, the problem is that he hasn't been doing much over the past weeks. Merkel has been pushing him in the background, but he has been busy with basically getting the government together. So now we are in this difficult situation, and he has so far said that he wants to set up a crisis management team within the government. But I think we need to look at how quickly they are actually going to get an agreement of the next steps, and because there are different measures in the discussion, a very limited approach of a limited lockdowns in the regions, as well as mandatory vaccination for care workers or for the overall public. But the elephant in the room really is whether there will, at the end of the day, an overall lockdown be necessary.
And Birgit, on that, are the coalition seeing eye to eye, or are there very different factions wanting different things?
Exactly, they are not seeing eye to eye, and this is why they couldn't reach an agreement beforehand. The SPD probably, under Scholz, would also follow the line of Merkel, but we have the Liberals, who in the past and also in the election campaign have taken more of an anti-interventionist approach. They have been sort of critical of far-reaching lockdown measures. And so they were standing, and they are still standing on the break. They are against lockdown measures and also critical of an overall mandate for a vaccination.
Birgit, thank you so much for joining us today. Birgit Jennen there in Berlin. Now, Bloomberg Surveillance Early Edition continues in the next hour. Of course, we'll have a full roundup of the markets. We're seeing quite supported markets, certainly when it comes to the European markets. We saw a similar move over in Asia, and of course we're expecting a similar move in U.S. futures. Now, the focus not so much on the U.S. today, but we do have ECB minutes. Again, it also is Thanksgiving, which means that we'll probably see very thin volumes across the world. The U.S. stocks proving resilient, though, overall yesterday to a slew of economic data and also to those Fed minutes that supported expectations for a quicker removal of stimulus by the Fed. So we'll have a full roundup of all of this shortly. This is Bloomberg.
Question the Fed is now managing is not, do we have an overheating problem? The new problem is, how do you land this economy softly?
We really can't control the stock price. What we can control is our execution.
Day after day, new records are being set in terms of the number of infections. The situation is serious.
This is Bloomberg Surveillance, Early Edition.
It is 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong on this Thursday, November the 25th. Our top stories today. Taper talk. The latest Fed minutes show officials are open to removing policy support at a faster pace to rein in inflation. Germany's COVID challenge. Incoming Chancellor Olaf Schultz sets out to steer the nation through the pandemic. The EU plans to bolster its travel rules. And damage control at JP Morgan. Boss Jamie Dimon walks back his China comments. Another example, perhaps, of Beijing's power in getting businesses to regulate their speech. Good morning, everybody. It is just gone 10 o'clock. It has just gone 10 o'clock here in London. A warm welcome to the programme. A special edition, if you like, of the Bloomberg Surveillance early edition today, because it is Thanksgiving. If you're celebrating Thanksgiving, wherever you are, then we hope you have a good day. In terms of the other markets away from the United States, of course, we are up and trading. The Stoxx 600 in Europe does move to the upside. European futures move to the upside. US futures move to the upside. Of course, we don't have US equity trading today, but we do have futures open, and they all point to the upside of the three major markets, E-minis, Dow and Nasdaq futures, all modestly to the upside. So we've got Stoxx 600 up by 0.4% here in Europe. It seems that the positivity around the US data picture and a bit of European earnings, all of that is overcoming our fears this morning, this Thanksgiving. We are thankful for the US data, and that is allowing us to put aside our concerns around inflation and the faster taper. Here in Europe, we've had some better earnings actually coming through at the tail end of the earnings season, the likes of Remy Cointreau, that pushing things around a little bit. I put the euro in here as well, but it's broadly a dollar negative story, it seems to be. The dollar down after 4 days of strength, this in the wake of digesting, of course, all that US data and what the Fed might do. We don't have treasury markets open today, so we'll see what happens when they reopen. And I put in here the Hungarian forint, not something we talk about very often, but just it's very zeitgeist to talk about rate hikes, of course, globally. We have the South Koreans hiking rates overnight. We've had the Hungarians increasing interest rates more than expected for the third time in 2 weeks. So that just an underlying illustration of what kind of moves we're seeing in terms of central banks' interest rates and interest rate policy and hikes, as I say, pretty zeitgeist. So we're seeing a surge in the Hungarian forint, and it is taking other emerging markets in Europe with it as well. So that's worth pointing out. Now, let's take a look at the day ahead. Plenty to talk about this morning, and we have a few items on the agenda to keep in mind, despite it being Thanksgiving, of course. The ECB's legal conference on continuity and change begins. The ECB President, Christine Lagarde, due to speak at 1:30 p.m. at UK time. Then at 5 p.m. at UK time, Bank of England Governor Andrew Bailey speaks at Cambridge University. And the EU Competitiveness Council meets in Brussels, with regulation of digital services topping the agenda. Now, the European Union is recommending tightening travel rules. Let's get back to one of our top stories, and that is, of course, here in Europe around COVID. The European Union is then saying it wants to set a 9-month time limit for the validity of vaccinations for coming into the bloc. Let's get to Bloomberg's EU government reporter, John Fellain, who's with us in Rome. John, good morning. What details do we have on this policy announcement so far?
Good morning, Anna. Well, we're getting the official announcement later today. There's going to be a news conference. And basically, we've seen a document which says that part of the proposals, and just bear in mind, these are proposals, they're recommendations which go to all EU member states. They have yet to be approved. And a caveat, given the patchwork of measures we've seen in dealing with COVID and with travel, there's no guarantee it will all be happily uniform. But basically, the two main news is that there would be a proposal for a 9-month validity for the vaccinations. So that suggests that after those 9 months, people would need boosters. And the other one is that for entry into the bloc, there's a switch of focus. Until now, we've been focusing on countries of origin, the regions, how bad the situation is there. The switch now is to switch to focusing on the people themselves, on whether they're vaccinated or not, given the increase in global vaccination. And the European Commission, the EU's executive arm, says in this document that all this aims to make things smoother, to have more clear rules, and obviously the aim is to try and harmonise what's happening on travel. Bear in mind also that the prioritising the travel means that access would also be allowed for people with WHO-approved vaccines, but if those vaccines have not been approved by the European authorities, they would also need a PCR. So a new jumble of rules, but generally trying to uniform things.
Trying to uniform things within the EU and for those visiting, and trying to persuade, I suppose, or influence policymaking within European nations. Member states will see how far they go along with these suggestions. Thanks to Bloomberg's European government reporter then, John Fellain, joining us there from Rome. And after 2 months of negotiations, Olaf Schultz has sealed a coalition deal to become the next German Chancellor, just as Europe's largest economy faces a surging COVID outbreak. At a press conference to announce the deal between his centre-left Social Democrats, the Greens, and the pro-business Free Democrats. So that is three parties coming together. Schultz vowed to position Germany as a climate leader and steer it through the pandemic. Our reporter Christoph Rauwald joins us now from Frankfurt. Christoph, what are the key points then of the agenda that was mapped out by the next German government? What do we know about their policy agenda?
Yeah, good morning, Anna. I think there are actually 2 points that are definitely set the tone yesterday. One, of course, the political move to basically step up the fight against climate or against CO2 emissions, accelerate the energy transition, and cut carbon emissions from Germany's large industrial operations, basically. But the other aspect, which probably has an even bigger urgency, is actually the fight against COVID that you just mentioned. We've seen record numbers here in Germany over the past few days. Last night we reached a threshold of 100,000 people who unfortunately died related to COVID-19 infections. And the number of new cases is still rising. So yeah, the big question there is like what the new government can really take in terms of concrete measures to bring the numbers down again and put some relief for the hospitals there in place.
And Christoph, we are very used to German coalitions, but we're not used to a sort of trio of parties coming together. So this is a new German experience, and they're coming from very different places, certainly in terms of the Greens and the FDP. What sense do we have? And maybe COVID gives them their first chance to either demonstrate their ability to work together or their ability to fall out. How do we think that the COVID decision-making goes from here? Do they all seem to be on the same page around fighting the virus?
Yeah, that's actually it's going to be very interesting to see. As I think Birgit on the program, my colleague from Berlin mentioned, from a policy perspective, the three parties that are involved in the coalition have been pursuing quite different policy approach, basically, in the past. The Liberal Democrats have been a bit like more reluctant, basically, to impose stricter measures, whereas the SPD and others have been in favor of those. And what's really essential here is that whatever they do, they can't really afford to take much more time, because I think if we learn one thing during the pandemic, it's basically that the virus can spread very, very quickly. So whatever they agree upon, they need to take action very quickly and come to an agreement that works for all the three parties involved.
OK, hitting the road running perhaps on this particular agenda item. Plenty of other conversations for later dates around how they manage the economy, of course. Christoph, thanks very much. Bloomberg's Christoph Rauwald joining us there with the latest on the German coalition now formed. Now, JP Morgan's Jamie Dimon says he regrets his joke that his bank is likely to outlast China's Communist Party. In a statement, Dimon said he was trying to emphasise the strength and longevity of the company that he runs. Let's get more with Ian Marlowe, Bloomberg's Asian government reporter. Ian, it's really interesting, isn't it? Jamie Dimon, in his first remarks that were broadcast and that many people heard, of course, he was talking about the long reach of China, and now he seems to have succumbed to the long reach of China in the sense that he's walked back those comments, possibly fearful of repercussions for his China business.
Yeah, exactly. I mean, this is a tightrope that a lot of businesses in China have to walk, and in Hong Kong as well now. And we've seen these comments that came out. They weren't even, he wasn't on a trip to Hong Kong. He had recently done one, but he was speaking in the States, and he had to walk these comments back. The interesting thing here, actually, is that partially because what he was addressing was so sensitive to Beijing, basically talking about whether the Communist Party will continue to survive as a political entity, it looks like China's actually just not wanting to come out and blast him over this. The other day, the foreign ministry just kind of brushed aside questions about Dimon's comments, and today they said they noticed the sincere reflection by him. We believe this is the right attitude, and we hope the media can stop hyping this issue. So, Jamie Dimon probably wants to put this behind him, but because of the sensitivity of the subject that he was addressing, unlike, say, Xinjiang cotton or Taiwan, where Beijing is more likely to kind of come out and just blast whoever was talking about this thing, it looks like Beijing also wants to put these comments behind them and try not to, engage in too much of a back and forth on this, because highlighting those issues in China, foreigners doubting the ability of the Communist Party to survive, that doesn't do Beijing much good.
Yes, I was watching yesterday on the Bloomberg wires, just expecting some kind of comment from the Chinese government, and it didn't seem to be forthcoming in very prominent channels. So really interesting what you say there, Ian, with regards to what China does and doesn't want to speak out about. And of course, we saw them taking on certain corporates over the cotton issue, but not so much here. Thanks very much to Ian Marlowe, Bloomberg's Asian government reporter. Coming up on the programme, the latest Fed minutes show officials were open to removing policy support at a faster pace to rein in inflation. We'll get the thoughts of the market's live team on where that leaves the Fed tightening talk. Plus, the Turkish lira's volatility curve is eerily reminiscent of a similar period in 2018. We'll talk to Venram from the Market Live team about that as well. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards, live in London. Now, London is racing to decarbonise its bus fleet, with the city's mayor promising a zero-emission network by 2034 or sooner. Bloomberg's Mark Daniel Davies spoke with transport bosses and campaigners about the road ahead for European cities.
We're in North London at one of the largest electric bus charging facilities in Europe. Behind me, this zero-emission bus is on its way to COP26 in Glasgow. It's one of thousands that's going to be rolled out in the UK over the next decade, a milestone on the road to net zero. Let's take a look. Fully electric buses like these are set to make up 10% of London's bus network by the end of next year. And the mayor says the entire fleet of 9,000 will be zero emission by 2034, 3 years earlier than planned.
This is a really big milestone, and it takes away the whole mythology about buses and exhaust fumes once and for all. There's a multitude of things that have to be working together. It needs partnerships with the manufacturers, with local authorities, partnership with governments. They are more expensive than a hybrid or a diesel vehicle, and we need to find ways of making that transition. The biggest transition of all, though, is to get more people on buses. Because once you get more people on buses, the commercial dynamics start working much, much better. One bus will take 75 cars off the road. That starts transforming the environment, transforms cities, transforms how we get about. That's the big key.
With over 2 billion bus journeys in 2019, the switch to an electric fleet is a big step towards carbon-free commuting. And it's just one part of a plan to transform the way millions of Londoners move.
Decarbonisation is about more than just the vehicles themselves. What's just as important is that we encourage more people to leave their car at home and to use sustainable modes. That's really the route to decarbonisation: walking, cycling and public transport. And the more we can encourage people out of their cars, the less congestion will be on the roads. Those that walk and cycling can do so in a more pleasant environment with less pollution and fewer vehicles around them. And those that are on the bus can get to the end of their journey faster and more reliably.
London has been indeed one of the frontrunners from all European cities in actually making changes towards climate action and also reducing air pollution. The expanded ultra-low emission zone will do even more to clean up the air, to fight climate change and to reduce the overall number of polluting cars, but we need to do even more.
Campaigners are pressuring authorities across Europe to get polluting cars off streets by 2030. And they say major system changes are already underway.
We surveyed over 10,000 European urbanites, including people from London, and the overwhelming majority of people want more space for walking, more space for cycling, more promotion for public transport and better public transport, and also they were crying out for more green space. And I think a full range of solutions is already available. One great example is Brussels. By 2030, there will be no more diesel cars allowed in the city, and by 2035, all petrol and gas cars will be phased out as well. There's also a number of initiatives in Paris. The inner part of the city will become a low traffic zone next year. This will limit the through traffic of about 180,000 cars each day. Copenhagen has also committed to procuring only zero emission buses from 2025 and to make a very large part of the city zero emission by 2030. We need to commit to creating zero-emission mobility systems in cities by 2030, and we absolutely need to make sure that this transition is as fair as it possibly can be. There's no time to waste.
The efforts there of some European cities to speed up the decarbonising of their bus fleets, brought to us by the Bloomberg Quick Take team. Let's get back to the markets conversation now. And a day after we saw a deluge of data from the United States and, of course, Fed minutes, resetting some people's expectations around Fed policy. Ven Ram, currency and rate strategist at Bloomberg Markets Live, joins us now on set here in London. Ven, good morning to you. So we had the data, which broadly seemed to lift spirits. We had the minutes, which seemed to give comfort, I suppose, that the Fed is thinking it could bring forward some of its tapering if conditions should warrant that. Where did that leave you in your thinking about what the Fed does from here?
I think that we are on a steeper, faster path towards higher rates. To borrow the Olympic motto, Citius, Altius, Fortius, and I do think that the economy has enough strength to withstand a series of rate hikes from the Fed here. And I think that the market pricing kind of reflects that, because the market was expecting maybe one, maybe two rate hikes by the end of next year before the Fed minutes. Now, and with the Powell's renomination, we see that they've brought it forward for the first hike to June.
Yes.
So,
and I liked the alliteration of 4 by 24, but now it seems more like 5. The hike expectations, we're seeing more and more of them being priced in. I mean, do we really wait till June, I suppose, is the next question for the first one?
That's a great question, and I do think that maybe we will have to wait for June, because they will need to finish the taper first, and I think that there is enough chorus within the Fed asking for a faster pace of taper, and I do think that they will get through taper first before raising rates, which puts us back in June.
Right, OK, and that puts us back in June, so that's the timing of that. I'm just looking at the Turkish lira this morning and seeing where we are on that, Ven. We've seen, of course, a real weakening of the Turkish lira over recent days, a real emerging market focus for it in terms of the FX story. But then we've seen some moderation of that move. What's the latest here? What are your latest thoughts?
Well, as you said, there's been a moderation, but I don't know if there's the next shoe waiting to drop. Because if you look at the options market, the volatility curve is inverted. Now, that is telling us something very significant. The inversion of the volatility curve suggests that shorter dated options are more expensive than longer dated options, which doesn't happen every day, because the longer you hold an option, the more you will want to pay up. But that's not happening in Turkey, and that suggests that the markets are very jittery about what might come next. The real problem here is the negative real rates, and they are not addressing that. As long as they don't address that, there's going to be a problem. And the gap now is pretty huge at the negative real rate, so they need to do something about it. We saw that play out in 2018 when there was a similar situation, and they resorted to emergency rate hikes of about 500 basis points. And the markets are probably looking for an encore here.
OK, I mean, inflation running where it is in Turkey. We're not talking about rate hikes for reasons that we've explored many times. Elsewhere, we are talking about rate hikes. We saw the South Korean authorities hiking rates overnight. We saw the Hungarians doing it the third time in 2 weeks. I think it's clearly very much part of a theme. But I know that you've been actually looking into some more sort of dovish commentary coming through from some central bankers around the permanence of quantitative easing, Ven. Where does this come from, and why is it a focus for you?
Well, it's a pretty significant thing. We heard from Holzman of the ECB yesterday saying that, look, we may put the PEP, after we exit from PEP in March, we will put it probably in a waiting room, so to speak. I mean, that kind of says that, look, we will deploy those measures if need be at the drop of a hat. And that is very disturbing, because you're basically saying we are going to have permanent QE on tap, so to speak. So basically, you're saying that, look, the markets will be supported forever and ever.
Yes.
So you're stifling price discovery, which is not a great idea.
I suppose anybody who's been in the markets for less than 12 years, though, might have assumed that, because they've always known QE as being a primary tool of monetary policy.
Absolutely. I mean, when Ben Bernanke introduced it, it was something that was very much necessary. But now, at every downturn, we see that central banks, it's become a part of the standard toolkit, whether it's the BOE or ECB or their Fed.
Yeah.
And that's going to set us up for financial bubbles down the road.
That's a different conversation then. Ven, thank you so much. Ven Ram from Bloomberg Markets Live. And for more analysis from the MLive team, NLI Vigo is the function on your terminal. This is Bloomberg.
Now let's get to the first word news. I'm Leanne Gerrans. British Prime Minister Boris Johnson has lashed out at France after a deadly boat accident in the English Channel. 27 people died when a boat filled with migrants sunk. Johnson is accusing France of not doing enough to stop migrants trying to get to the UK from northern France. He is under political pressure to stop small boat crossings. Now Singapore is confident it can avoid a Europe-style resurgence of coronavirus infections. The health minister gives the credit to one of the highest vaccination rates in the world and growing natural immunity. About 85% of Singaporeans are now fully vaccinated. I'm Leanne Gerrans. This is Bloomberg.
Thanks very much, Leanne. More next on Germany. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London. Matt Miller and Kayleigh Lyons are, of course, enjoying a well-deserved Thanksgiving break. Now, let's turn to German politics. Olaf Schultz said his new German government, which is expected to be sworn in early next month, will do everything to fight the pandemic. He added that the current situation is serious, with some hospital intensive care units already reaching capacity.
Day after day, new records are being set in terms of the number of infections. Even though many of the cases have become much milder as a result of vaccinations, more and more infected people are being admitted to hospitals in some regions. Intensive care units are reaching the limits of their capacity in some places. The situation is serious.
Let's get some analysis now. Katharina Utermoehl, Allianz Senior European Economist, joins us now. Katharina, good to get your perspective. I'll start with the COVID situation, as that is what we heard the Chancellor in waiting, if you like, talking about there. What are your expectations for what kind of measures come forward from the German government, and crucially, what impact that will have on the German economy? You know, when you're doing something for the fourth time or perhaps third, it might not have the same effect as the first time around.
Absolutely. I think for now, really, the key objective is to avoid a national lockdown. I think what we'll see is that increasingly stricter measures will be taken in various states. We already see them, for instance, in Saxon, and I think also Bavaria is moving towards let's say, a lockdown light. However, clearly, the economy, I think, has gotten used to lockdowns to some degree. It's going to hit growth. We're going to go back into hibernation at the turn of 2021-22, and we only expect mini growth for the German economy. But for now, you know, not a wintry setback or even a recession as we had it last year.
OK, so that's your expectation. That's what you're working into the numbers. Give me your response to the coalition details that we've had so far then, Katharina, because as well as dealing with COVID, of course, this new administration is just coming together really for the first time, not fully appointed, of course, as we know. But there are 3 members of it, and that could pull in very different directions. What's your big unanswered question, I suppose, about how this coalition is going to work?
Yeah, these are definitely, let's say, 3 coalition partners that are sort of uneasy bedfellows that haven't often worked together on a bilateral basis, or now there are even 3 of them in the bed together. So the coalition agreement with 177 pages that we all worked through during last night shows that it is possible to build bridges, it's possible to be pragmatic, but it also shows that this took a lot of compromise. And therefore, for instance, you have a finance minister from the liberal FDP party that is usually in favor of, you know, going back to 60% of debt levels of GDP, who now, though, also will have to accept that there will be shadow balances that are, or shadow budgets that are off balance sheet. And so let's just see how that works in practice. What we say in particular with regards to German fiscal policy, yeah, the proof of the pudding will be in the eating here.
What do you mean by shadow budgets and shadow balances then? Is this because we understand that they want to try to comply with the debt brake? They want to try and sort of mobilise private investment and private capital. Is that what you're referencing there, Katharina, or something different?
I think it's something different. So as I understand the text for now, and let's be clear, it's quite vague at times. is that the government will go back to the debt brake by 2023. So this is, the FDP handwriting, the Liberals. But then at the same time, it will also allow federal agencies, but also, for instance, Deutsche Bahn, to raise funds themselves and to invest them. So that will be off balance sheet. That will not be counted towards the debt brake. And then in addition, and that's probably the most important aspect here, is that unspent funds from the 2021 budget, so that's around 60 to 70 billion, will be put into a separate fund to be spent on investments on climate and the transformation of the German economy over the next couple of years. And that will also be excluded from the debt brake. And it remains to be seen if additional funds will also be raised within the 2022 budget. So that could be, for now, what's planned here is 100 billion euros for next year. So this could add up to quite a sizable pot.
Okay. Yes, I think it was the same thing, that those funds being excluded from the debt brake. I just perhaps worded it badly. Katharina, thank you for explaining it to me. Let me ask you about the environmental policies here. And, of course, the Green Party, part of this three-way coalition. We have a plan to exit coal by 2030. Germany also has bold nuclear exit ambitions, of course, and that's been a long-standing policy. Is it clear now how Germany makes all of this add up, then, Katharina, what the energy mix looks like for Germany into the future?
I would say that among the major economies is probably the most ambitious green transition plan that is out there. But at the same time, if you put these big green targets on your flag, let's say, we also need to be realistic that we're not quite going to make it with the measures that have been announced in the coalition plan. In particular, I think what's worrying is that we will need to see a higher carbon price. And what's currently proposed, a guideline of around 60 euros, we think is just far too low to really reach the targets. So this is just one example of, it's good to have these ambitions. It is necessary for the German economy to transform, but it remains to be seen if there's not going to be some disappointment at the end.
OK, where do you think the carbon price should be, Katharina? Where are we heading to?
Yeah, we think it's more likely that it will have to be around 100 euros. So that's quite a bit higher. And we'll also need to think about how to compensate, of course, lower income households, so that there will still be acceptance to protect, to fight climate change here. And this is not, I don't think we're there yet when we look at the coalition agreement.
Just briefly, Katharina, and finally, does the coalition still face any headwinds to fully forming? I know that each of the parties has to go through its own processes to make sure that members are happy with what's being proposed here. Are there difficulties ahead, or is this a done deal?
I think it is a done deal. There could be perhaps some more tweaks here and there. But overall, I think that the individual parties will accept the plan, and so therefore we should have probably by the first week of December, we should have a new government in place with Olaf Schultz being sworn in as the new chancellor.
Katharina, thank you so much. Katharina Utermoehl, Allianz Senior European Economist, thank you very much for joining us. Coming up on the programme, Antoni Trenchev, Nexo's co-founder and managing director. We'll talk about crypto. We'll talk about NFTs. He has been buying one, we understand, and we'll ask what the purpose of that is. More on cryptos and how thankful we are for them this Thanksgiving. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards, live in London. And now it's been a choppy period for cryptos, with Bitcoin gaining today after the coin lost some 20% since its record high earlier this month. Joining us now is Antoni Trenchev, the co-founder and managing director of Nexo, a London-based crypto lender. Antoni, really nice to speak to you. It is Thanksgiving. How thankful are you for gains in crypto this year? What kind of a year has it been?
Oh, it's been an incredible year, and I'm very thankful for it. You know, the Chinese curse, may you live in interesting times. this year around has yielded some incredible results. And with any success story, some luck always plays a role here.
Okay, so but is the bull market in crypto over, Antoni? And whatever your view, how on earth do you know? On what do you base your thinking around whether we head higher from here?
Right. Well, it's very easy to forget that just in July, we had dipped below $30,000 per Bitcoin. Just 10 days ago, we were at 69,000, which was another all-time high. In regular financial markets, a 20% drop would bring us to bear territory. But in crypto, this is just a rest and consolidation before the other leg up. In terms of why I believe the bull market is going to persevere, is the fundamentals, is the printing machine, is the the characteristics of Bitcoin, scarcity, and it being Gold 2.0.
Okay, so it's not a bear market, it's just a rest. That's what we call it when it comes to crypto, Antoni. But you mentioned it there, the printing machine. I mean, it's been much talked about that perhaps the rise in cryptos has been driven by the large amount of liquidity available in markets these days, courtesy of central banks. I mean, do you think that Bitcoin is vulnerable, or are meme tokens vulnerable? Where is the vulnerability as we see central banks dial back their generosity?
Right. Well, I think that, the risk is being outside in crypto than being in it. And once you're in it, it very much matters what you're actually holding. I would recommend for people who are just starting out to hold some of the blue chips, the equivalent of the blue chips, which would be Bitcoin, Ethereum, some of the more established coins which outperform over the long run. And then if you want to throw into the mix like a tiny portion into meme coins, which have the potential for asymmetric returns in the hundreds, even thousands X of returns, feel free. But, just be mindful that it might crash rather aggressively as well.
Okay, so that would be your recommendation. What about regulation, though? Because in all parts of the crypto universe, Antoni, this must be something that people still acknowledge could come at any time and could be a difficulty. Just yesterday, we saw headlines around India, news that the government there is preparing a bill to regulate crypto. It might allow trading in some areas to promote the underlying technology, but they want to basically prohibit all private crypto, and they want a central banking coin instead. Is this something that you're expecting other jurisdictions to echo?
I don't think that we're going to see a crackdown in crypto as such, like they had in the 1930s in the United States, where they prohibited the ownership of gold. The signs of the wall, to me, are different. The OCC in the United States allowing banks to hold custody, and PayPal coming in, and now the ETF, even though it's based on futures contracts rather than the spot of Bitcoin. But it comes down to crypto being regulated and fit within the frameworks of the existing legislation rather than outright banning it. And, the jurisdictions that go the more aggressive route, I think will ultimately pay the price, because the technology is there, the merits are there, more people are coming in on a regular basis, incredible companies and new virtual realities are being built out, and whoever sticks their head in the ground and remains oblivious to what is happening, will be on the short side of the stick.
Is there a democratic vacuum, though, when it comes to crypto, Antoni? Is this something the crypto universe thinks about at all? Because at least I know that central banks are not maybe as accountable to democratic electorates as many people would want them to be, and that's an ongoing conversation. But they are at least appointed by democratically elected officials in democracies, of course, I'm talking about here. And in the crypto world, there isn't that control. Is that something that crypto enthusiasts think about?
Yeah, certainly. I mean, the beauty of crypto, to me personally, that it is relatively free in the sense that, the market forces get to play out. There's no central entity who has such a hard sway over the markets like, in traditional markets, whereas central banks such as the Fed, the ECB, you have these gargantuan players who determine the direction, and crypto is relatively free, especially compared to that. So the market forces can play out, and I think thus far this adds to the anti-fragility, to borrow from the Sim Taleb, and the resilience of the space. Now, in terms of governance, this, as it's grown to almost a 3 trillion industry, that's why we see regulators come in. And our approach and recommendation is let's self-organize and self-regulate so that other outside players don't do it for us.
Right, okay, well, that's interesting if that's what we saw happening in the crypto space. Antoni, I know that, NFTs get a lot of our attention, of course, non-fungible tokens. We talk about them a lot in connection with the art world, and I know that you've been spending your money on one of these, $1.3 million, I think, for 3 cartoon apes at Christie's. You perhaps didn't fancy the Hockneys and the Basquiats that were on show that day. Why purchase an NFT? What does that add to your business?
Right. Well, we purchased it as a company, so it's not my personal purchase. That's important. And, we have big plans for NFTs because we believe the non-fungible tokens are going to be the layering foundation of the metaverse, which is being built out. Last but not least, Facebook's renaming to Meta. And if you think you're outside of metaverse, you can check your screen time on your phone, how much time each day you're spending on your phone. So most people are halfway there. Now, the Bored Apes that we bought, they have a ranking system in terms of scarcity, which creates value in the minds of crypto enthusiasts. And there's, an increasing number of them amongst us. And the other thing is, to me, these are the monuments of the world that's being played out. Just last week or 10 days ago, there was the auction for a working version of the Constitution. Who in the 18th century would have believed that this will now auction for $40 million? So this, to me, NFTs are the newer version of the same from the upcoming Brave New World that is around the corner.
Okay, maybe I'll come see your Christie's purchased NFTs in the metaverse then. Antoni, thank you very much. Antoni Trenchev, Nexo co-founder and managing director. Really good to speak to you today around crypto. Up next, American households are about to eat their costliest Thanksgiving meal ever, if they can even find a turkey. We look at some of the factors driving up dinner prices. This is Bloomberg.
Now let's get to the First Word News. I'm Leanne Gerrans. The price of oil steady today after OPEC said a coordinated release of reserves may make a crude surplus next year even larger. The cartel and its allies meet next week. Some OPEC delegates warned that releasing strategic reserves may lead the alliance to hold back oil supply in January. Now in Germany, the number of deaths from coronavirus has now gone over 100,000. The country passed the grim milestone at a time when the latest wave of the pandemic has led to a record pace of infections. Battling the virus will dominate the early stages of Germany's new government. In China, tough COVID-0 policies are standing in the way of a full recovery for the shipping industry. In an attempt to keep the virus out, China has continued to block crew changes for foreign sailors, and Chinese crew returning to port face as long as 7 weeks in quarantine. All that has added up to the global supply chain crisis. And a new government review has a warning for English football. It says there will be more financial chaos unless money filters down from the Premier League more evenly to teams in the lower levels. The report says the sport is at a crossroads. Despite the wealth in the Premier League, English football teams have ended up in administration 62 times in the past 3 decades. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
Leanne, thank you very much. Leanne Gerrans with your First Word News update. Let me just get to some breaking news across the Bloomberg terminal. We are focused, of course, on any clampdown on technology in China, and the China state-run firms are going to limit the use of Tencent's messaging app. This is according to Dow Jones this morning. China state-run firms citing security concerns. And I mention this because this comes a day after we saw some of our reporting suggesting that China was freezing new Tencent apps and updates for data privacy review. So there does seem to be some further legs to the concerns around technology clampdown in China. Now, it is, of course, Thanksgiving, but the impact of rising inflation on America's turkey dinner dinner might just dampen the mood a little bit. Joining us now on set here in London, Bloomberg's Ed Ludlow, who is looking forward to his own turkey dinner, probably at the weekend.
Yes.
Hope it's not too expensive, Ed. Talk us
wait.
through the rising price of this Thanksgiving meal.
Right, so nothing quite typifies the kind of global inflation supply chain story like the turkey, because if you think about the dinner table, it's going to be a 14% year-on-year gain for Americans this year across the meal, but the turkey's the centerpiece, 20% to 24% inflation from last year. And it's subject to all kinds of things. It's an industry where they can't get enough workers to process. The supply is limited. Even in the frozen side, you see retailers dipping into frozen inventories because the fresh product's not there. And as has been the case all year long in the food industry, here and in the United States, retailers don't hesitate to pass on those costs to consumers, different from big box, which is happy to see some margin erosion to protect its market share. So it's a really interesting dynamic.
OK, so we're looking at the Thanksgiving table, gives us a sense of where we've come on the food story this year. Let's bring it a little closer to home then, Ed. Talk about European, food supply or just supply constraints generally. Where are we on that story?
Well, that chart you just saw was food price inflation in the United States. The white line and the blue bars were Europe. And in Europe, it's been much more muted. It's interesting. The main driver has been rising cost of fertilizer impacting agriculture. That's largely because of natural gas crunches, because it's, an energy-intensive exercise. I think what's worrying from a Bloomberg economics perspective as well, from the data they've crunched, is that the supply constraints in Europe aren't improving, whereas they are in Europe. Europe is subject to lockdowns, COVID restrictions impact the way people work, the number of hours they can work, the proximity they work to each other. And, the Fed, at the same time, is also worried about inflation. We got those minutes where they kind of boosted their inflation outlook even before we got the October data print. And, the ECB is thinking about a similar story. The thing is, the ECB has a really worrying COVID case count that policymakers aren't sort of hesitating, and a growing number of which are clamping down. And that's the worry for our food supply chain.
OK, so the narrative coming through from our colleagues at Bloomberg Economics is that we are seeing some improvement then around the US story, but maybe not here in Europe. So keep an eye on that. Ed, thank you very much. Bloomberg's Ed Ludlow with the latest on supply chain and the impact that some of that supply chain issue and labour shortage has had on the Thanksgiving table. If you are celebrating Thanksgiving wherever you are, then we hope you have a really good day, turkey or not. Let's have a quick look at these markets then. We are, of course, just coming up to 11 o'clock here in London, so a few hours into our European trading session, and we're up by 0.2% on the Stock 600. The FTSE 100 is up 1/8%. The CAC 40 up 0.2, the DAX up 0.2. So we are seeing some moves to the upside across these European equity markets. US futures, for what it's worth, do point to the upside. We'll talk more about these markets when we return. Of course, US equity markets and treasuries closed for Thanksgiving holidays. This is Bloomberg.